Welcome in Ron Kruszewski. He is the chairman and CEO of Stifel Financial. Ron, it's good to have you back today. Welcome.
Thank you, Kelly.
Let's start with stagflation, which you think is maybe something should be more top of mind for the market here, and maybe obviously for the Fed too.
Well, you just talked about the 2 to 10 curve being flat, and what's equally interesting is the 3-month to 10-year, which is 180 basis points, Kelly. So when you think about it, the 3 to 10 being flat, yet the 2 to 10 being flat, but the 3-month being steep, that just tells you literally how far the Fed is behind the curve. And so on interest rates, you're going to see, I think the Fed's going to raise 5 to 6 times, get to 150 to 175 basis points. The question will be what happens with inflation. And that's something the market should worry about. No growth and high inflation is a risk for this market.
You know, one comment that I see a lot, this is why Twitter is very helpful in that regard. Every time we have, especially a bank CEO, but a lot of people who are now calling for more interest rates, parts of the public go, that's just because the banks want to make more money. They're talking their own book. They are drooling over, the income that may be headed their way. What would you say to that segment of the American public who thinks these calls are self-interested?
Well, it's economic. It's not. I easily and quite readily admit that we, as an institution, will do better with short-term rates increasing, and don't want to think that I'm drooling about it. What has to happen, though, and what the public should understand, is that what you don't want to drool over is inflation. And so you might be thinking, well, rates are going up, and I might spend a little bit more on rates. But, Kelly, I mean, if inflation it runs rampant, it's running 4, 5, 6%, that's a much greater cost on the general public than short-term rates increasing. So that's how I'd answer that.
And why so when we talk about what could happen with inflation here, and you do think the Fed's behind the curve, why do you think stagflation is the worry, maybe a rival worry, relative to which, stagflation kind of implies economy slowing with stubbornly high inflation, whereas right now we basically have economy growing with stubbornly high inflation?
Well, because I think the Fed, that's the balance bar that the Fed is on. The world is, in the U.S., is coming off sort of a sugar high, if you will, from all the stimulus that occurred, and that's been driving a lot of economic activity. But we're not going to see another $6 trillion of fiscal spending, nor are we going to see the Fed expanding its balance sheet by another $4 trillion. Those two things really drove the market. In fact, it's going to go the other way. And so the economy is slow. It's already slowing in China. It's slowing in Europe. And I think the economy can slow here while inflation remains, elusive to control, at least at this point. And that stagflation is really not something anyone's seen since I got in the business. And I hate to admit it, that was back in the early 80s, Kelly. So we should be thinking about that risk for sure. I personally think the market's going to be trading around 4,600, give or take a few percentage points, as the market digests all of this.
So not a disaster, but not exactly bullish either. That stocks continue to trade at these levels.
Not bullish. I like to the one risk, Kelly. I always like to give you risks that I don't hear people talking about too much, and I'll give you one that can create issues for the U.S. economy that we're not talking about yet, and that is, I personally believe there will be a diplomatic solution in the Ukraine. The question will be, well, how long will the sanctions continue after there's a diplomatic solution? And it goes to the whole question about whether or not there was a regime change or what's going to go on. But if sanctions continue for a longer term, that's a problem. We need free trade, and that's going to be a problem that will slow growth across the world. And I, again, think this is why, in my mind, it's not a red light, but the light's, flashing yellow in terms of the markets.
Shepard Smith here. Thanks for watching CNBC on YouTube.